Hello, guys. Good evening. So let's start a new chapter today, which is chapter number 12, Bank Reconciliation Statement. Guys, this particular chapter is very important from exam perspective, as well as when you go out practically and do any accounting related work. So that time also you will definitely come across a situation where you would required to reconcile the bank statement, right? So what is bank? What is reconciling? What are we doing in this chapter is something what we'll eventually learn, right? So we'll understand in detail in this chapter what is the meaning of bank reconciliation. So we need to understand what is the meaning of bank. We need to understand what is the meaning of reconciliation, right? What is the need and importance of doing the bank reconciliation, right? That is something which we'll learn. Then we'll learn the difference between what is the balance as per cash book, what is passbook. The difference between the two will be explained, and what are the various methods of preparing the bank reconciliation statement is something which we'll be learning from this chapter. And how do you present a BRS, right? This bank reconciliation statement in short is referred to as BRS, right? So how do you present this, right? And preparation of bank reconciliation statement from corrected or adjusted cash book balance. These are all the topics which we are going to discuss in this chapter, guys. And this is a very important topic also. So before we proceed towards reading the theory part, I would want to, give you an idea, outer line about why are we studying this particular chapter, right? Okay. Well, this is a bank. Guys, do you all know what is a bank? What is the functions of bank, guys?
Accepting deposits.
Right? They accept deposits, they accept money and lend it. So basically, the business of banking is lending business. So they take money from the people, those who have surplus money at home, and they give that money to all the people, those who are in need of money, right? So this is one of the functions of bank. What are the other functions of bank? What are the other functions of bank? Can I say because of bank, now the payment mechanism has become more faster and more reliable. Do you agree with me? Because let's say before the invention of the bank, if I have to make payment to somebody in Delhi, what people do? People used to travel all the way to Delhi, hand over the cash and come back. So it is very time consuming. It is very risky also, right? Now with bank in place, can I say that if I have to make any payment to person in Delhi, Bombay, or any person who is very far away from within our city, it is easy for me to make a payment. It is a matter of just couple of functions which I have to do on my phone or let's say on the laptop, and the payment is gone to the other party, right? Can I say this mechanism has made the payment process very smooth and efficient? Yes, sir.
Yes.
Right? Okay. So there's a bank here. We can assume any bank that could be. And here is a businessman. This is business of Mr. X. Okay. So Mr. X is operating a business. What he does is he goes to the bank. He opens a bank account in the name of his business. He opens a bank account in the name of his business. Once the account is opened, what will the person do? Mr. X has to deposit some money, deposit some cash into the bank account. Only then the bank balance will increase. Right? Am I right or wrong? So if Mr. X now deposits the money into the bank account, what is the journal entry that he will pass to record the money in his books? Let's suppose Mr. X is depositing 1 lakh rupees. Mr. X is depositing, is giving 1 lakh rupees to bank. Is giving 1 lakh rupees to bank. Cash deposit. What will be the journal entry, guys, for this?
The bank account debit to
Bank account debit.
Bank account debit to cash. This is the entry what we'll pass. So forget cash at the moment. So Mr. X, what he will do is he'll open a bank account ledger. He'll open a bank account ledger. On left hand side it is debit and right hand side it is credit. Guys, this is the format that we follow for bank account. Yes or no? This bank account is created in whose books? Am I creating this bank account in our book, that is in the books of Mr. X, or am I creating this bank account in the bank? I'm telling about the account. I'm telling about the, not the real bank account. I'm telling the book bank account. So obviously this book bank account is created in the books of Mr. X. Can you tell me the reason why are we creating this bank account ledger? Can you tell me the reason why are we opening this bank account? See, practically what happens is Mr. X will go here, he'll open an account in his name. He'll open a bank account. He'll open an account in his name wherein he'll be given an account number. In that account number, he'll deposit money and will withdraw money and he'll do all the transactions. Okay. Now we are opening a bank account, basically the bank ledger. We're opening a bank ledger in the books of Mr. X. Can you tell me the reason of why are we opening a bank account or bank ledger in our books? What is the necessity to open a bank account or bank ledger in our books of accounts? Basically to record all the transactions, whatever the money I'm depositing in bank and whatever money I'm withdrawing from the bank, everything has to be recorded, right? I need to know how much money totally came inside the bank account, how much money totally went outside the bank account. So it is easy for me to understand from where the money is coming and to where the money is going. Yes or no?
Yes, sir.
Right. So now what happens is Mr. X is depositing 1 lakh rupees. Where will I record the entries, guys? If he's depositing 1 lakh rupees cash, where will I record 1 lakh rupee? On debit side or credit side?
Debit side.
Debit side, because bank is an asset, bank balance is an asset. So I recorded this money in the bank account. I've deposited this money in the bank account, and this money is something what the Mr. X owns it, right? Mr. X is owning this money. So anything if I own, that is my asset. So to increase the asset, we debit it. So to cash, I debit 1 lakh rupees on the debit side. Guys, now if the same statement, this bank account, if I write in a different form, instead of writing in this way, if I record this way, bank account, if I record this way, do you have any problem? To cash. If I record in debit column, can I say that to cash, if I record 1 lakh in the debit column, can I say it means the same 1 lakh deposited, cash 1 lakh deposited in bank account? Yes or no? Instead of writing in this format, if I write in this format, can I say it means the same? Bank account I'm opening, in that I've recorded to cash 1 lakh rupees in debit side. It means that 1 lakh rupees cash is deposited in the bank account. Yes or no?
Yes.
Right? So who prepares this statement, guys? This bank account is bank ledger. Who will prepare? A person from the bank will come and prepare, or the accountant of Mr. X will prepare.
Accountant of Mr. X.
Accountant of Mr. X will prepare all this work, because accountant's role is what? Every transaction which is happening in the business, he has to record in the books of accounts. So this is basically my books of accounts. This is my books of accounts. Now what happens is, the moment you go and deposit the money in your bank account, what will banker do? What will banker do? Banker will send you an information telling that, see boss, 1 lakh what you gave us, it has been deposited in your bank account. So if you have seen the message, maybe from your parents' cell phone, the moment your parents deposit some money in their bank account, or maybe your customer of your father and mother, if they deposit money in the bank account, or for instance, you guys, when you make the tuition fee, when you deposited the money in my account, instantly I get a message that so and so amount is deposited at on so and so date. I get an instant message, right? So this is an instant message I get. Like that, every money that is coming inside the bank account and every money that is going outside the bank account, bank will now prepare a statement. Bank will prepare something called as a bank statement, or it is also called as a passbook. This is a document that is maintained and prepared by the bank. In that, what will bank record? Bank will record this is the money that is being deposited. So this is particulars. Again, debit here and credit here. So what happens? Cash deposited. Cash deposited. Now tell me something. Where will bank record this? In debit column or credit column?
Credit column.
So CA Foundation people, not you. My question specifically is to 11th standard CBSE people. If this 1 lakh rupees cash which you deposited, okay, this statement is something your accountant will maintain, and this statement is something the bank will prepare and give it to you. So when bank is preparing the statement, this is a bank statement of your account, guys. This is your account, the account what you opened, right? This is the statement of your account. So when you are depositing 1 lakh cash, so bank has to definitely capture that 1 lakh rupees in the statement. Which column they'll capture? Debit column or credit column? Rakesh, any ideas?
Debit column.
So in the credit column, sir.
Rakesh, you're saying credit column.
Yes, sir. Because actually our money is a liability for the bank, so they have to repay our amount whenever we actually close our accounts or something like that.
Correct.
So our money is a liability to the bank, so they are actually crediting our money.
Perfect. Perfect. So Rakesh is absolutely correct. Now, guys, see, cash we have debited. You have recorded 1 lakh rupees on debit side. Why debit side? Because this 1 lakh rupees in future, whenever you demand from bank will give it back to you. Right? Anything which I receive in future or anything which I own is called an asset. So bank account is an asset for us. Anything which is there in any money which is lying in the bank account, any money which is lying in our bank account, that money is something which belongs to us. So we have the right to demand that money back from the bank. So anything which we receive in future is my asset. To increase the asset, we give a debit. To decrease the asset, we have to give a credit. So when I'm depositing 1 lakh rupees in bank, my asset is increasing. Hence, I debited the cash account. I debited the bank account. Sorry, I'm debited the bank account. Now this 1 lakh rupees, when it goes to the bank, is it the money of the bank? No doubt it is gone to the bank account. But that bank account, technically, who's the owner of the bank account? The owner of bank account is us. So in our bank account, 1 lakh is deposited. But who is physically holding the money? Can I say this 1 lakh rupees is physically held by bank? Yes or no?
Yes, sir.
Right? So whenever tomorrow you go and demand the money from bank, is bank under the obligation to repay that money back to you? Yes or no?
Yes, sir.
Tomorrow whenever you go to bank and tell bank, see, 1 year before I gave you 1 lakh rupees, no, give that 1 lakh to me. So will bank give that money to you or not? Will he be under the obligation to give the money to you or not? Guys, what do you feel? Yes, of course. So this money is your money. So whenever you demand, the money has to be given by the bank to you. So any money which we have to give in future, any money which the bank has to give to somebody in future is a liability. So liability has got what balance, guys? Debit balance or credit balance?
Credit, sir.
Credit balance. Now when you gave the money, when you gave your money to bank is liable to pay that money back to you. So it increases the liability of the bank. When you go and give your money to bank, since that money is not bank's money, the liability of the bank is increasing, because tomorrow whenever you demand that money back, bank has to give that money to you again. So this 1 lakh rupees I'm recording on credit side, because this 1 lakh rupees is liability of the bank to pay the money back to you in future, or to whomever person whom you tell bank to pay. நீங்க சொல்ல இந்த 1 lakh rupees வந்து you pay to some XYZ person, any person. If bank is following your instruction, then this money bank has to pay to somebody else also. In that case also it is a liability. Very clear, guys? So whenever the amount of liability is increasing, I will record in the credit column. Whenever the liability of the bank decreases, I will record that amount in the debit column. Which means, sir, whenever we deposit the money in the bank account, we will record that in the debit side and bank will record in credit side. Guys, not only this transaction, any transaction you take, if we debit it, bank will credit it. If we credit, bank will debit. It will be opposite always, because for us this bank is an asset. For bank, this bank statement or bank account is a liability, because it has to pay the money in future to us or to whomever person we tell to pay. Are you able to get this idea, guys? What is the difference between bank account? So this is basically my ledger. This is the ledger in our books of accounts, and this is the account what you opened, right? Adoda statement or passbook. Now Are you able to get some picture about this, guys?
Yes, sir.
Now, my question to you is, bank is giving the statement to you. Bank is giving this statement to you every month, or even if you want on daily basis, the bank can give you the statement, right? If bank is giving the statement to you, why are you preparing this bank account in your ledger, in your books of accounts? Obviously, if I don't record my bank account, bank ledger, my journal entries will not tally. Because whenever I'm depositing the money in bank, if you just record two cash, if you don't record bank, then double entry system is not followed. So to ensure the double entry system of accounting, we have to open. So whatever transaction takes place in the business, for everything we have to account it, right? So this account is done, bank account is opened to take care of our bank, our accounting policies. This is open to follow the accounting policies of the business. Now bank is preparing this bank statement or passbook to ensure that their accounting system, their rules and regulations is followed. So both of them are preparing their own statement. No problem in that. Now tell me something. Whatever accounts you prepare, that is whatever ledger you prepare and whatever ledger bank prepares or whatever the statement bank prepare, the amount should be same or not. If you deposited 1 lakh rupees, the amount that is there in your bank account, that is in the ledger, and the amount that is there in your bank statement should match, should be same or not.
Should be same, sir.
Right? So when it is same, what it means that, okay, now prepare pan accounts, the accounts what we prepared and what bank is giving, both are matching, which means everything is perfect. But is there a possibility that sometimes these two bank balance which not match, which means the bank balance as per my ledger and the bank balance as per the statement, there is a mismatch. Practically, there happens a mismatch. Now, if there is a mismatch, being an owner, if you are, let's say, a business owner, how will you feel it? If there is a mismatch, your bank ledger is telling something else and your bank statement is telling something else, how will you feel? How will you feel?
Bad, sir.
You will feel, what is happening, man? How can the records what I am maintaining, because transactions at the end of the day, both the places it is recorded, then how there is a mismatch, right? So if there is a mismatch, a sense of fear, comes within you. Oh my God, did somebody swindle my money? Did bank, take away the money without my knowledge? Like that, you will start getting a feeling. So that is why it is very important to reconcile the transaction between both the banks. What do you mean by reconcile? To match, right? If there are 10 transactions I recorded in my ledger, there has to be same 10 transaction that has to be recorded in the bank statement with the same value, with the same amount. If both the places 10 transactions recorded with the same value, which means perfectly it will match. But sometimes practically it will not match. Maybe here there are 8 transaction and there it is 10 transaction. And sometimes maybe here there are 7 transaction and maybe here it is 10 transactions. Practically it happens, right? So in this chapter, we are going to learn in detail why such thing happens. Why is that in my bank ledger, I have 10 transaction, whereas in the bank account, I only have 7 transactions. We learn that why in our account, there are only 8 transactions, whereas in bank, there are 10 transactions. So this is what this chapter is going to teach us, right? So when there is a difference, to solve the difference, you prepare a statement called bank reconciliation statement. To resolve the mismatch, I repeat the word, to resolve the mismatch. Whenever there's a mismatch, to resolve the mismatch, you prepare a statement of explanation. BRS is basically a statement of explanation which will explain why here there is 8 transaction and why here there is 10 transaction, why here it is 7 transaction, why there it is 10 transaction. To explain the difference, we prepare BRS is basically a statement which will explain the reason for difference in transaction. For the difference in transaction, what is the reason why this is happening? It will explain the reason behind this, right? So whenever a person sees that the bank balance as per the bank account and the bank balance as per the bank statement, if it is different, then what he'll do is immediately he'll ask for BRS. After seeing BRS, he'll be convinced, okay, this is the reason why it is difference, and he'll be convinced. Yes, it is nothing wrong. There is nothing wrong in having a different amount in different accounts and statement, because there are certain accounting norms that we follow, because of which, there are certain situations because of which there could be a difference, right? So there is genuinely a difference which happens practically. So to solve the mismatch, to solve the difference, we prepare a statement called bank reconciliation statement.
So,
Yes, boss.
so when is the reconciliation statement usually prepared by the business?
See, there is no particular timing. You can prepare BRS on daily basis. You can prepare the BRS on weekly basis. You can prepare the BRS on monthly basis. So practically, if you ask me, BRS is normally prepared at the month end. Every month end, it has been prepared. And importantly, every year. So every year, as on 31st March, BRS happens. But there is
Okay.
no conditions or rules as to that, BRS has to be done only monthly or yearly or quarterly, half-yearly. It is absolutely the convenience of the business owner and the accountant. If whenever they want, they can do a BRS. There's no as such rules and regulations attached to this.
Okay, sir. But what will be more suitable, sir, according to you?
Monthly,
Like,
because generally what happens is, generally the accounts are closed every month. Earlier it used to be closed once in a year,
okay,
but now, business owners, to know the profitability on monthly basis, they do close the books of accounts on every month. So every month, and if you see, when I was working as a head of finance in a private limited company, I used to prepare, like my team used to prepare BRS every month. But there are people used to prepare BRS even fortnightly, that is once in 2 weeks also. It is totally up to you. Depends on the transaction, how much you have, and the nature and frequency of difference what you have, right? Based on that, it is up to the requirement of the business that how much they have to prepare.
okay, sir.
Now what happens is, let's suppose that 1 lakh you have deposited, guys. So this is, let's say, my bank account. This is my bank account ledger. Particulars: debit, credit. So cash deposited 1 lakh rupees. And maybe the last column what I'll have is balance column. Last column what we'll have is a balance column. So credited 0. So what is the balance in my bank account? 1 lakh rupees is the balance in my bank account. Correct? I mean, somebody's having a background noise. Keshav, I think a lot of background noise for you, dear. Right now, this is particulars. This is basically the bank statement, or we can say the passbook. What is passbook? I'll explain. Don't worry. Bank statement or passbook. Here also we have debit, credit, and balance. Okay. This statement is prepared by the owner. That is the accountant of the business is preparing this. This is prepared by the accountant. Accountant of the business is preparing this, and this bank statement is prepared by bank. So bank is preparing this document, right? So the moment you deposit cash in the bank account, whenever the bank collects the money from you, what they'll do is cash deposit. They will record on the credit side. When you record the amount in debit side, banker will record the same in the credit side, 1 lakh rupees, and they'll say 1 lakh rupees is the balance. 1 lakh rupees is the balance. Now what happens is, guys, let's suppose that there is one particular customer. There's one particular customer who has deposited the money in your bank account directly without informing you. I repeat, there is a customer who has deposited your money into the bank account directly without informing you. So can I say, again a cash deposit will come here. Let's say 50,000 is deposited. 50,000 is deposited. Now what will be the balance, guys? Can I say the balance now? It will become 1,50,000 rupees. Yes or no? 1
Yes,
lakh
sir.
rupees is already amount what you deposited. Your customer has deposited 50,000 rupees. Now the balance is 150. Now what happened is, this gentleman who deposited the money, he forgot to inform you. He's informing you after couple of days. Let's say this guy is deposited this money on 31st of March 2020. Okay. So 50,000 is deposited. He forgot to inform you. Now, as on 31st March, when you are preparing the accounts, What is the balance that is being shown here? 1 lakh rupees is the balance in my bank account as on 31st March. As on 31st March 2020, the balance in the bank account is 1 lakh rupees. Sorry, balance in the bank account ledger. And here it is 1,50,000 rupees. Okay. This is also on 31/3/2020. Now, please tell me, is there a difference or not?
Yes, sir.
Is it a genuine difference or not? Did I do anything wrong as a accountant? Did I do anything wrong?
No,
If the
sir.
customer is not informing me, how will I know? Only when customer informs me, I will record an entry in my account and ledger telling that, okay, this money is deposited. Now, genuinely, there is a difference. Now, how do I resolve this difference? Now, on 31st March, I have not passed any entry. And what happens is, after 3-4 days, that is on 4th or 5th April, the gentleman is calling and telling, sir, on 31st March, I deposited 50,000 rupees. Now, on 4th or 5th, the accountant cannot go back and record the entry as 31st March entry. Or if at all he does, he'll do it later. So there is a difference now. How do you resolve the difference? How do you resolve the difference? Guys, are you able to follow what I'm telling? So what happens is 1 lakh rupees, the balance as per ledger. Balance as per ledger is how much? 1 lakh rupees. Okay. Now what will you do? You will add 50,000 rupees to the bank account, because who is right here, guys? Who is right here? Can I say bank is right here? This balance is correct. So what will you do? You will add cash deposited by customer directly into the bank account. 1 lakh is the amount already there in your bank account, right? And this is there already in your ledger. So this 1 lakh, you will take it and record here. And with this manually you will add 50,000 rupees. You are not passing any accounting entry, guys. Bank reconciliation statement, in that we are not doing anything debit. There's no debit, there's no credit. It is a statement that is prepared on the plain white sheet, or maybe on the Excel. If you know what is a Microsoft Excel, on the Excel this document is prepared. What am I trying to explain? Sir, the balance in my ledger is 1 lakh rupees, sir. This 50,000 I've added. Why I added? Because this 50,000 rupees is the money with the customer directly deposited in bank, but he did not inform me. Hence 50,000 I'm adding here for your purpose. This 1 lakh is coming from the ledger. This 1 lakh is coming from ledger. This 50,000 manually I'm adding based on the information what I got. Now the balance is 1,50,000 rupees, sir. This 1,50,000 and this 1,50,000. Now is it matching or not matching? Is it matching or not matching? Guys, is it matching or not matching? Here, this 1,50,000 is here. This bank reconciliation statement, who's preparing? This BRS is a statement prepared by the accountant. So accountant is preparing, giving to whom? He's giving to owner. This statement is required by owner of the business, or maybe the chartered accountant of the business, who is going to file the income tax return of the business. Chartered accountant will come and question, what, gentlemen? Accountant, here you have 1 lakh rupees you're showing in your ledger, whereas in the bank statement which I am seeing, it is 150. What nonsense is this? Accountant is telling, sir, don't get panicked. Please wait. I'm giving you one statement. Please go through the statement. You will yourself understand what is the problem. So the accountant is giving the statement to the chartered accountant or the owner. So it says that 1 lakh rupees is the money which is there in our bank ledger. 50,000 we did not pass an entry because as on 31st March, there's no information from the customer. So this 50,000 came to me as information only later. So I will record this 50,000 entry not on before 31st March. I will record this entry after 31st March, because this information was given by the customer to me only on 4th April. So I will record this journal entry on 4th April. I'll record this journal entry on 4th April only. Whereas bank has recorded the 50,000 entry when bank has recorded this on 31st March. And when is accountant going to record this? Accountant is going to record on 4th April. So can I say there is a timing difference of recording? There is a difference in timing. There is a timing difference. Bank is recorded the amount at a different time or date, and we as an accountant are recording the information at a different date, because the accountant has received the information on 4th only. You guys are able to follow? So now there is a difference. How do we resolve a difference? So BRS is prepared to resolve the difference, to explain the accountant and owner, sir, we are also not wrong and banker is also not wrong. right? So based on the information what bank received, bank has given this amount to you. This is the amount that is reflecting. Based on the information what came to me, this is the amount that I recorded. Both are not wrong. But how do we solve the issue? This BRS will help us to solve the issue. BRS will tell, sir, this 1 lakh rupees is there in my bank ledger. 50,000 is the amount that is directly deposited in the bank account on 31st March, which the customer failed to inform us. So I'm adding this money for your understanding. Now this is matching with the bank. Now the accountant and owner will be okay, right? This is the difference, and the reason for the difference is known. Now accountant and the chart accountant and owner, all the three are comfortable that okay, this is what has happened, and they proceed towards the next activities. So can I say, guys, whenever there's a timing difference, whenever the accounting transaction differs for bank and the business, that time BRS is used. BRS is used to resolve the issue in form of giving an explanation as to why there is a difference between the transaction that is recorded in two different statements. So bank account, there is a different transaction. In statement, we record a transaction little differently. So what is the reason behind the difference is something which is revealed or explained through BRS. Okay, not okay. Guys, are you getting an outer line as to what is a BRS? Hello? Anybody there?
Yes, sir.
Yes, sir.
I'm not expecting you to understand this 100% because to understand this 100%, this is what we're going to do in the entire chapter. I'm just trying to give an outer line. Whenever there is a difference in the amount between the bank account ledger and the bank statement, to resolve the difference, we prepare a document called BRS. I want you to understand only this. Why are we adding? What will be subtracting? Everything I'll be teaching you in a very smooth way. And now I want you to digest why BRS. Why are we studying BRS? I'll be clear with that point. So who is preparing this BRS, guys? Is bank preparing the BRS or the accountant? Or can I say this owner? This owner, can I say this person is called as a bank account holder? Is the account holder? Is the bank account holder? Basically, he is the holder of the bank account of some bank. Can I say that way or yes or no? Can I say owner is also called as a bank account holder? Because let's say if I have bank account in HDFC, I'm the account holder of HDFC. I'm holding an account in HDFC. So I become the account holder. Yes or no? So this is a document that is prepared by the bank account holder. It can be owner who himself preparing it or the accountant of the owner himself preparing it. Are we clear with this point, guys?
Sir,
Yes,
Yes,
sir.
boss.
sir, can you give one more example of this difference, sir?
No problem. The entire chapter you are going to study difference only, Arman. Don't worry. The illustration one, which I'll be taking there, you'll come across multiple examples. Don't worry. I'll explain you in some time. Don't worry. Now, guys, let's understand what is bank reconciliation statement. Bank reconciliation statement is a statement prepared by the account holder, the bank account holder on a particular date for what? To reconcile the bank balance. To reconcile the bank balance as per cash book. Guys, this bank account is prepared under what? This is prepared under cash book. We have something called cash book, right? Under cash book, we have something called bank column of cash book. So to reconcile the bank balance as per cash book with the bank balance as per bank statement, which means that there is a balance coming in my bank account as per the cash book. Cash book is nothing but my books of accounts. So as per my bank ledger, there is one balance, and as per the bank statement or passbook, there is another balance. To reconcile the difference, to reconcile the bank balance as per cash book with the bank balance as per the passbook, showing entries because of which the differences between the two balance exist. I repeated story. Bank reconciliation statement is a statement prepared by the account holder. It is a statement prepared by the account holder, that is the owner of the business or the accountant of a business on a particular date. For what? To reconcile the bank balance as per our book with the bank statement, which is showing the difference between the two balances. There are two balances. My bank balance is showing my cash book is showing one balance, my bank statement is showing another balance, right? There is a difference between both the statement. So to resolve the difference between both the statement, we prepare a statement called bank reconciliation statement, right? Now, amount deposited into the bank is recorded in the bank column of cash book on the debit side. If I deposit the money is recorded in the debit side. The transaction is recorded on debit side. So basically, what are they trying to tell you guys? In business, we have something called cash book. If you have read the subsidiary book properly, we have something called cash book. In cash book, what do? We have two columns. One is cash column, other is bank column. Guys, yes or no? We have cash
Yes,
column
sir.
and we have bank column. This side is called debit side, this side is called credit side. So whenever in the cash book, this is basically cash column. This is the cash column of cash book. This is bank column of cash book. I repeat, it is called as cash column of cash book, bank column of cash book. So cash book, under cash book, we prepare two column, cash column and bank column. Whenever money is coming inside, we record in this debit side, and whenever money is going outside, we record on credit side. So that is what they're trying to explain. Amount deposited, which means amount when it is coming into the bank, is recorded in the bank column of cash book on the debit side. That is receipt side. While withdrawals, the money going out, and issue of checks are recorded on the credit side, that is payment side. This is something we already know. Yes or no? This is something which we already know. Further, it says that bank also maintains an account of the account holder in its book of accounts, which means apart from this is something which we maintain. But apart from us, there is a statement which bank maintains, because tomorrow bank will want to know, right? For this particular account holder, what money came in and what money went out, because even banker has to maintain their accounts, right? So banker is also required to maintain the books of account. So he'll make a statement that, see, this gentleman is your customer. In this particular customer's account, how much money came in, how much money went out, everything has to be recorded and maintained, right? So he will prepare another account. Bank also maintains an account of the account holder in its books of account. In its means in bank's books of accounts. Okay. Deposits by the account holder. The money which we are depositing in the bank account is recorded on the credit side of the account holder. That's what we did, no? Whenever we deposit the money, the banker will record this 1 lakh on the credit side because it is a liability for the banker. So it records on the credit side of the account holder's account. And withdrawal, if any money is withdrawn, if I go and withdraw any money, then let's say if I'm withdrawing 20,000 rupees, this 20,000 rupees will be recorded on the debit side. Why? It decreases the liability. If liability of the bank decreases, because out of 1,50,000, 20,000 you withdrawn. So in future, what is the amount that you can go and demand from bank? You can demand only 1,30,000 rupees. So from 150, the liability is reduced to 130. Why? Because of this 20,000. 20,000 you already withdrew. So the future liability of the bank is 1,30,000. So to decrease the liability, banker will debit the amount in the debit column, and to increase the liability, bank will record the money in the credit column. But the withdrawals are recorded on debit side. A copy of it is given to the account holder in the form of statement, bank statement or a passbook. So whatever the account or the statement which the bank is preparing, whatever the accounting is done by the bank will give a copy of the statement to the account holder or the accountant, telling that accountant or bank owner, what you can do is, see, this is the statement what I prepared. You cross check with your accounts what you prepared and tell me if both are right or wrong. If both are matching, then both are happy. If something is missing, bank is not bothered. We have to only correct it. So basically, bank will give a statement to us, or a passbook is given to check for our records to check and to reconcile if there is any difference. There could be certain transaction which bank is recorded, but we forgot to record. To solve the issue, to solve the difference, bank statement is very useful. Guys, bank statement or passbook. Passbook is basically, guys, a small book is given. In that book, all the transactions are printed and given by the bank. Passbook is nothing but it is a book that is given to us. So every time we have to take the passbook to the bank and get all the transaction printed on the passbook. You can check with your parents if they're having passbook. You can have a look at the copy at home. Even if I have the passbook at my home, I'll show how it looks like, because passbook is now become little old concept. Now everybody is directly using the bank statement, right? So bank statement is something which is very common now. Passbook, it's been outdated as of now. So guys, are you clear with what in which column the entries will come, right? Are you clear with the concept, guys? if bank is recording the account, if bank is maintaining the account, in which column they will record money coming in and money going out, and which column we will record. So it is very obvious that whatever we record on debit side, bank will record on credit side, and whatever bank records on debit side, we will record on our credit side. So it will be completely opposite. It will be completely opposite. Any doubts till this point, please? Any doubts till this point, please?
No, sir.
Next, thus debit entries in the cash book are shown on the credit side of the bank statement. Debit entries in our book is shown in the credit side of the bank statement or passbook, while the credit entry in our books are shown in the debit side of the bank statement or passbook. It is opposite. It is opposite. Transactions of deposit and withdrawals during the period being recorded in both cash book and bank statement, balances shown by the two record at the end of the period should normally agree. So what are they trying to tell you is, whenever you deposit any money, whenever you withdraw any money, both the transactions are recorded in both the statement. That is, in cash book also it is recorded, in bank statement also it is recorded. If all the 10 transactions are recorded in cash book as well as bank statement, can I say that normally but the balances should agree or not? The balances will match or not? What are they trying to tell is, you recorded 10 transaction in the cash book and you recorded the 10 transaction in the bank statement. So bank has recorded 10 transaction in the bank statement. You have recorded 10 transaction in your book. Same value, everything is same. The balance of the bank in the ledger and the balance of the bank in the statement, will this both agree or not agree? Will this be same or not? It will be same, right? So that's what they're telling. Normally it will be same. Normally it should be same, but sometimes the two balance will differ. If the two balances differ, it is necessary to know the reasons for the difference, right? You need to know the difference, as it may require entry to be passed in the books of accounts. Now to pass the, we need a reason as to why there is a difference. Once you find the reason, then accordingly you can pass the entry in the books of accounts. You can make the necessary adjustments in the books of accounts, right? The difference may be because of an error in cash book or the bank statement. The mistake or the difference could be of multiple reasons, guys. One of the reasons what they've given here is maybe error. Error means what? Maybe the error is committed by our side, or maybe the error is committed by bank side. It's 99% or 99.99%. There is no way that bank will make mistake. But yes, there are certain chances, 0.01% chances where the bank can go wrong. But 99.99% bank will never go wrong. If at all there is an error, it should be mostly from our side, right? So there are multiple reasons for which an error is occurring. To show this reason, a statement showing the reasons for a difference is prepared, and this statement is called as BRS. So whenever there is a difference in the balance, bank balance as per the cash book and the bank statement, to resolve the difference, we have to show a statement, we have to prepare a statement showing the reasons or causes for the difference. That statement is called as bank reconciliation statement. Okay, not okay, guys?
Okay, sir.
Okay, so without wasting much time, what I'll do is I'll take you to the illustration 1. I'm sure we'll not be in position to complete the entire illustration 1 today, but yes, I would at least want to do 2 or 3 transactions to make you understand the concept. Guys, illustration 1, it says that on 31st March 2019, can I say 31st March means it is year ending? Is it year ending or not?
Yes, sir.
Yes,
On
yes.
31st March 2019, bank column of cash book showed a debit balance of 49,000 rupees. What do you mean by this? Can somebody please explain me what are they trying to tell you? What are they trying to tell you?
So the balance brought down is 50.
Not brought down. Balance carried down. You're right, brought down, but we are in 31st March 2019. Only when you are in 1st April 2019, you can say it is a balance brought down.
No, carried down.
Yes. So basically, this bank column of cash book showed a debit balance of 49,000. Now, this 49,000 is shown balance in which account? In our books of accounts, or is it in the bank account? bank balance statement which the banker is maintaining, in whose book it is showing debit balance of 49,000 rupees?
In our book, sir.
It says bank column of cash book. Cash book means our books of accounts. In our books of account, in the bank column, it is showing a debit balance. Debit balance means what, guys? Asset or liability? Asset or liability?
Asset, sir.
Asset, which means this 49,000 is the money which we have to recover from the bank. We have to receive from the bank. So I would have recorded during the entire year. So this is basically particulars rupees. Particulars rupees. This is debit side and this is credit side. You would have recorded multiple transactions on the debit side, multiple transactions on credit side. You're getting as a balance carried down. You're getting balance carried down as 49,000 rupees. 49,000 is the balance carried down. Okay. As on 31st March. As on 31st March, which means on 1 April 2019, 49,000 is coming on debit side, which means this is a debit balance. This is a debit balance. So this 49,000 is coming as per our books of accounts. Our accountant is telling that, sir, as per our bank account ledger, 49,000 is the amount that the banker has to give us. Now, what is banker saying? Banker is saying, sir, bank balance as per the bank statement. Bank balance as per the bank statement, the passbook is showing a credit balance of 37,400. What do you mean by this? Bank.
So the bank should give only 37,400 showing, sir.
Yes. So credit balance means what? Credit balance means it is a liability. And obviously it is a liability, no? Because banker has to give that money to us. So banker is saying that, no, I'm not supposed to give you 49,000. I'm supposed to give you only 37,400. Now, can I say there is a difference between the two accounts? Yes or no? As
Yes,
per the
sir.
bank statement, if you see here, as per the bank statement, the balance carried down. So banker also records multiple transaction here. So banker is telling that the amount that I'm supposed to give is 37,400. 37,400. So balance brought down. The next year is 37,400, which is coming on credit side. Hence, it is a credit balance. Now, there is a difference between the two. There's a difference between the two. To resolve the difference between the two, we have to prepare a statement called bank reconciliation statement. Bank reconciliation statement. Now, before you go ahead and prepare a bank reconciliation statement, you have to decide one thing, guys. Before you start doing a BRSM, you need to tell me in the both statements, the both statement which you're seeing on the screen, in the rendu statement, any one person is right. Whom do you want to take as a right person and proceed? So this question will inform you. So we are taking in this question as that the balance as given by the bank is correct. We are taking bank balance is correct. That is, this balance as per the bank statement is correct, which means this 49,000 which is there in our books of accounts, maybe we would have ignored some transaction. Maybe there are certain transaction which we are supposed to add and minus. So with 49,000, if I add something, if I minus something, then the final amount which I'll get will be equal to the bank balance as per the bank statement. So what I'm supposed to do is, now here we are understanding that the bank balance is correct. So with 49,400, I'll be adding some transactions and I'll be subtracting some transaction, so that the final amount after addition and subtraction, I'll get one amount. This amount should match with the bank balance as per passbook. This is what we are trying to do, guys. This is what we are trying to do. So this is bank reconciliation statement as on 31st March 2019. As on 31st March 2019. So can we do? So what is the step? We have particulars, then we have amount detail, basically all the items which you have to add totally, it is written in the inner column, and then we have outer column. We have something called outer column. So bank balance as per cash book you have to take. Cash book debit balance, DR means debit balance. It is debit balance. So that will be the starting point, guys. Why are we taking this as a starting point? Because we are trying to make correction this 49,000. With 49,000, I'm going to add something and subtract something. I'm going to add something and subtract something. So I'll take 49,000 as a base. I'm going to take 49,000 as a base, right? Okay, before I proceed forward, I want all of you to take a break of 5 minutes, come back afresh, and then we'll continue with this illustration, guys. Let's take a break of 5 minutes and come back and continue. All right, guys, welcome back from the break. Now let's understand the first transactions. So basically, we have seen that on 31st March 2019, they have given the bank balance as per our book, and they have given the bank balance as per the bank statement, and both are not same. Which means to resolve the difference, we need to prepare a document called bank reconciliation statement, where we will try to mention the reason as to why there is a difference. Okay, these are the list of differences, guys. There are 6 differences. These are the 6 differences or 6 situations because of which the difference is arising. Okay, the first situation is that check of Sham 9,000 rupees and of Mohan 15,000 rupees were deposited in the bank, but were not collected up to 31st March 2019. Okay, one more time, guys. What are they trying to inform? Check of Sham 9,000. So Sham, there's a person called Sham who's giving a check of 9,000. There's a person called Mohan who's giving 15,000 worth check to us. We deposited this check in the bank, but bank did not make the collection up to 31st March 2019. Can somebody explain me what is happening here? Rakesh, any idea what is happening here? Rakesh?
Yes, sir.
Yes, Rakesh. So, looking at this first question, can you just give me an outer line as to what is happening? What is happening here?
So here, so the checks deposit. I mean, they have deposited checks worth uh, 9,000 rupees. Sham has, given
Who is
us check.
Sham to the business, Rakesh? What is the relationship between Sham and business?
So he's a debtor, I suppose.
He is a debtor. Yeah, you're right. Why is a debtor? Because, see, guys, it says that check of Sham and Mohan were deposited in bank, which means Sham and Mohan is giving check to us. Why will somebody give check to us? One is maybe because this guy is a customer who took the goods from me on credit and now he's making the payment. He's giving the payment in form of a check, right? Maybe Sham is giving the loan also, but here they did not mention. Since nothing is mentioned, we will always assume that Sham is giving money to us, maybe because he's a customer. So Sham and Mohan both are a customer. They're giving the check to us. Can you explain the process, Rakesh? What is happening here? Any idea of as to what process is happening? So Sham is giving a check.
Sir, so we have received checks of both Shyam and Mohan. So according to our cash book balance, we debit 9,000 and 15,000, sir.
Okay. So what is the process, step-by-step process, Rakesh? Can I say the first step will be Sham will come with a check of 9,000 rupees and he will hand over that to the business owner or the accountant of the business. Yes or no?
Yes, sir. That's
What
the
will be the
first.
second step, Rakesh?
The second step following Shyam would be Mohan, who gives his check to the business.
Okay, we'll do one thing. We'll ignore Mohan. We'll take Sham as an example. I just want, we complete the complete transaction cycle. I just want to draw the complete transaction cycle on the board so that we can explain others that, how this entire thing works and why there is a difference, right?
Yes, sir.
Yes, Rakesh. What will be the next step? After receiving the check from Sham, what will the accountant do?
So the accountant would credit Shyam's account.
Correct. So let's suppose that what happens is, let's assume that whatever the check is received from Sham, it is deposited on the same day. So second transaction will be, step will be that this gentleman is going, accountant is going and depositing the money in the bank account. Whose bank account?
The business's current account.
Yes. So this is basically, let's suppose that this businessman is having the account in the Axis Bank. So this is basically the Axis Bank. So the accountant is going and depositing. The second step will be deposit check of Sham. Whatever the check Sham gave, this will be deposited. Now please tell me, Rakesh, when this check is deposited into the bank account, will accountant pass any journal entry in the books of accounts?
So yes, sir. So he will actually pass the entry bank account debit to Shyam.
Yes, bank account debit to Sham account. Can you please explain me the meaning of this journal entry, Rakesh?
So here, like Shyam, as you said, so he has purchased some goods on credit from us, and
Correct.
he is actually repaying, I mean, settling his debts to us.
Correct.
So we are receiving 9,000 rupees from Shyam. So when we receive cash
Money.
from a debtor, we credit him, and I mean, not cash, I mean check. So we receive a check and we deposit. Since we deposit on the same day, we
Correct.
debit bank account instead of checks in hand account.
Hmm.
So we assume that the bank balance has increased by 9,000.
Okay, we are assuming, right? That is the right word, Rakesh. So, guys, what happens is the moment the accountant goes and deposit the check in the bank account, he will deposit a check of Sham to Axis Bank, the account where the bank where he is having the account. He goes and deposits the check of Sham to Axis Bank where he is having the account. So if you see here, the moment the check is deposited, the bank account is debited, which means the bank balance is increased by 9,000 rupees. Now my question to all of you, the day when you go and deposit the check in the bank account, on the same date, will you receive 9,000 rupees in your bank account? Does it happen normally? No. You have to understand why. Now what will happen is, once the accountant goes and deposit the check in the bank account, this Axis Bank will take this check and he'll go to the bank. He'll go to the bank of the Sham. Sham would have maintained the bank in, let's say, SBI. SBI is another bank. So Sham gave the check to business, right? So Sham is having an account in the SBI bank. So the check what the Sham gave, is the SBI check. So this SBI check, our business accountant has deposited in the Axis Bank. So Axis Bank, what he'll do is he will carry the check. He'll carry the check to the bank, SBI Bank. He'll tell SBI Bank, see, we have got an SBI check from one of your customer. See, Sham is the customer of this bank. Do you agree with me?
Yes.
Sham is the
Yes, yes.
customer of this bank. So Axis Bank will go and tell, Rakesh, can you mute your singer? I think I'm getting a background noise. Thank you so much. So Axis Bank will go to SBI Bank and tell SBI Bank, your customer Sham, no, he has given one check to my customer. So my customer has deposited the check in my account, my bank, and I want you to take this check and give the money in return. So third step is Axis Bank will carry the check to SBI. Axis Bank will carry the check to SBI. SBI, what he'll do, he'll take the check, he will check certain points, the certain things it will check. SBI will check everything, if everything is all right. If everything is all right in the check, what will SBI do? SBI will give the money. Give money to Axis Bank. Give money to Axis Bank, which means it comes to our bank account, right? So right from receiving the check and to getting this money, guys, it will not happen in one day. This will take nearly 3 to 4 days of process. It takes 3 to 4 days of process. The first day we are recording, the first day, the moment we receive the check and deposit the check, first day when நம்ம என்ன பண்றோம், bank account debit ன்னு சொல்லி சொல்றோம். But bankல வந்து, in bank, when it is really getting, when the Axis Bank is really getting the money is received only on the 4th day. We are recording the transaction as money received on the first day. That is in our book. In the bank column of cash book, we are recording as if money is received on the first day. But whereas in reality, the money is coming in the Axis Bank only on the 4th day. It is coming only on the 4th day. Now, please tell me, will there be a difference or not? Let's suppose that this is 1st March to 31st March. And this is 1st April, that is next year, 1st April to 30th of April. Now on 31st March, you record this entry. This is the first day, guys. This is the first day. In first day when you are receiving the check, on 31st March, what entry you are passing? As if the money is received. You debited bank account. But this money is getting credited in your bank account when? On the 4th day. On the 4th day, money is getting credited. Adavadhu 3rd April. 3rd April is a date when the money is getting hit in your bank account. When the real money is coming into bank account. Now, can I say that as on 31st March, you are closing the books of accounts, guys? Accounting process is stopped by 31st March. On 31st March, you will calculate your profit and loss account and you will prepare balance sheet as on 31st March. So when you prepare the balance sheet, in the balance sheet, you have something called bank account. In that bank account, can I say you will mention that this 9,000 is received. So when you prepare the balance sheet here, in the bank account, it will show 9,000 rupees money received in the balance sheet. But when you compare this with the real bank statement, when you see the real bank statement, in bank statement 9,000 rupees is not there as on 31st March. As on 31st March, in the bank account, that money is not there because the money is coming into the bank account only on 3rd April. So as per the bank statement, the amount is 0. As per the bank column of cash book, the amount is 9,000. This is happening on 31st March. On 31st March, the balance as per our book, it says that bank balance should be 9,000. Whereas if I go and really check the bank account, the balance is 0. Now, is there a difference or not? Is there a difference or not? Guys, are you able to follow? That is why, can I say, that is why the balance is more. In our books, the balance is more, and bank is telling, no, I don't have to pay so much because I don't have that much money to pay. Bank is saying that, boss, I have only 37,400 in your account. How will I pay 49? So why it became 49 is because this gentleman, what he did, no, accountant. The moment he got the check, he debited the bank. Is accountant right or wrong? Is accountant right or wrong? He debited bank. Is he right or wrong? Without money receiving, he's debiting money. He's showing as if money is received. Is he right or wrong? Without receiving the money, he is debited bank. Is he right or wrong?
Wrong.
Technically, you might feel he's wrong, but he's doing as an accountant what he's supposed to do. The moment check is deposited in bank, then naturally any person will pass an entry. Right? So this gentleman has passed the entry because this is one of the accounting process that is being followed by the business. Nothing wrong in this. But because of this accounting process, what the business follow and the accounting process what the banker follow, both are different. Because of this difference in the accounting process, because of the difference in the accounting policy, there is a difference in the bank balance. So now tell me who is right here. When we started the question, we assumed that the banker is right and we are not correct. So accordingly, I will have to make the corrections in my bank account. So what should I do? Please tell me. Okay, let me switch on my video. Guys, am I visible to all of you?
Yes,
sir.
Yes, sir.
ஏன்பா என்னோட மூஞ்சி எனக்கு தெரிய மாட்டேங்குது. Is it clear?
Yes, sir.
Okay. Can you see these two hands?
Yes, sir.
Yes, sir.
Okay. We'll be using these hands very frequently, guys. All of you have to keep your hands like this. Right side is bank. Left side is our books. I want all of you to place it. If possible, please switch on the video also. Maybe for a few minutes. Just let me have a look at all of you. I have Bala Sarvesh, Saraswat and Shrikant in front of me. Guys, please switch on your video.
Sir, this camera doesn't work, sir.
Okay, whoever can, please switch on. Komal, Bala Sarvesh, Mansi, if you guys can just switch on your videos. I just want to, I want you to repeat what I'm doing. Right? So this right side is your bank account, left side is your books. I want everybody to have your hands like this. Do it fast, my hands are paining. Okay, good to see you, Bala Sarvesh. Hello. Others, guys, do it quickly. Right side is what, guys?
Bank, sir.
Right side is bank, left side is your book. Why are we having right side as bank? Because bank is always right. Bank is always correct. So that's why right side. Right? Now tell me something. The moment we deposit the check in our bank account, what does my accountant do? Accountant will do bank account debit to debtor. So when I pass the journal entry, can I say the bank balance in my book will go up? The bank balance left hand side, which is your balance as per the book. Can I say it will go up? Because accountant has debited the bank account. He told that money is come. So can I say the left hand side hand will go up? Right? Now tell me, One is up, another is down. Both the balance has to be same. Normally, then the balance has to be same. Only then your accounting is perfect. But now there is a difference. Why? Our accountant has recorded as if money is come. Banker has not recorded anything because technically in the bank account, no money is received as on 31st March. As on 31st March, no money is received. So technically, banker will not pass any journal entry. Hence, there is a difference. Can you see a gap, guys? There's a difference. Who is correct here? Bank is correct or we are correct?
Bank, sir.
Bank is correct. So I need to adjust my book. So can I reduce the amount of 9,000 rupees from the book to bank is correct, right? So I need to bring the left hand down. So when I bring the left hand down, am I reducing or am I increasing? Mal in the kila konda reduce or increase ama?
Reduce.
Yes, it will reduce. So I need to subtract. So if you come back, if you see here, the 9,000 is subtracted. 9,000 is subtracted. Subtracted from what? From 49,000 rupees, 9,000 is subtracted. Similarly, Mohan also 15,000 will be subtracted. Yes or no? Yes or no?
Yes, sir.
Are you getting the concept, guys? A lot of people, they try to by heart what should be added and what should be subtracted. I will teach you the concept behind this, where in life you will never forget what should be added. When you by heart certain things, right, you might remember now, but tomorrow you will forget it. That's what I did when I was in my 12th. I never understood it conceptually. I just did mug up. But later when I understood the meaning, till today, I've taught the BRS to the students in the last year. After that, today only I'm opening BRS. I did not even touch the book. I did not even revise. I know what is a concept. Right? So using these concepts, we'll be doing all the sums and we will learn what should be added and what should be subtracted. So now what we learned is from 49,000 rupees, I'm reducing 9,000 so that I can match the balance with the bank. So 9,000, 15,000 has to be, what do you call, subtracted. Guys, are you able to follow this point? The next question, it says that Ramesh is a debtor who deposited a check of 8,000 directly into the bank. Now what this customer is doing, unlike Sham, what did Sham do? Sham gave the check to the accountant. I went and deposited the check in the bank. But this Ramesh is not giving the check to the accountant. He's going and directly depositing the money in the bank account. That is basically what is happening is, so let's say this is business. This is Ramesh, right? If I'm not wrong, yes, Ramesh. This is Ramesh. This is Axis Bank. And this is SBI. So Ramesh, instead of giving the check to business, he's not giving the check to business. Instead of giving the check to business, Ramesh is directly going and depositing in the account where the businessman is having the account. So he's directly going and depositing the Axis Bank check. Now tell me what will happen in the next process? Direct deposit. This is direct deposit. So Axis Bank will take this check and go to SBI Bank, and SBI, after checking the check, you'll give the money to the Axis Bank. Now tell me something. When Ramesh is going and directly depositing the money in the Axis Bank account, will accountant have any information about the money being deposited by Ramesh? Will
No,
Ramesh
sir.
pass any entry in the books? Will he pass the entry bank account debit to Ramesh? Will he pass this journal entry? Do you think he'll pass this journal entry?
No, sir.
He will not pass the journal entry because he is not aware. So what happens? Ramesh went to the bank and deposited the money directly. Axis Bank took that check and went to SBI, collected the money and came back. Which means in the Axis Bank account, the money is credited, the money is deposited. Let's say the money value is how much? 8,000 rupees. So 8,000 rupees is come to the bank account of the account holder. Now, same hands. Now, when Ramesh is going and depositing the check, directly in my bank account, can I say right side is bank, left side is my book? When the Ramesh is going and direct depositing, can I say the bank balance will go up?
Yes, sir.
Bank balance will go up. Right hand will go up. Because when money comes, my money balance will increase in the bank account. I'm talking about the real bank account. The real bank account, the money is increasing. Whereas in my book I have not passed any entry. So it is lying idle here itself. But my bank balance is increased. Who is right here, guys? Bank is right or book is right?
Bank is right, sir.
To bank is right. So in my book, can I add 8,000 rupees so that the level is same? Now the balance will match. So what I did, first both were same. The moment the customer directly deposited the money, the bank balance went up. Hence there is a difference. If you see, there is a difference. Whenever there is a difference, you need to prepare a bank reconciliation statement. So in bank reconciliation statement, since you said that bank is correct, so I will not touch bank. I will increase the balance in the book. Not in form of a journal entry, but in form of a BRS. I'll prepare a statement. In the statement, I will add 8,000 rupees and make the level equal. I'll make the level equal. So this 8,000 rupees, technically what am I doing? I am adding. Check deposited directly by Ramesh, 8,000 rupees I am adding. Okay, not okay. Yes, any doubts in the first two journal entries? First two transactions.
No, sir.
Perfect. Let's go to the third entry.
Sir,
Yes, boss.
sir, but with the upcoming technologies like net banking and all these things,
Yes.
this is not applicable in today's life now.
See, to be very honest, if you do net banking is a process, guys, where if I transfer the money today, immediately the money will get debited in my bank account, and from my books also I'll credit it. So when you do the NEFT, when you do RTGS, that time there'll not be a difference. But whenever there is a check in place, guys, to be very honest, even if the net banking has come today, the process of giving the check is still not stopped. In lot of business, even today check has been issued. So whenever there is a check in place, there is always a difference that is possible. Whenever there are certain instruments which we are exchanging, and that instrument is taking there is a time gap between what we record in our books and the thing what we record in the bank account. If difference in the null, definitely BRS will come. But wherever NEFT is happening, wherever RTGS is happening, wherever IMPS is happening, basically on the spot when the transaction is happening, that time what happens? Immediately the transaction is captured in my bank account also. And at the guys, is my voice audible to all of you now?